Stock market is very complicated. For many, it feels like the market is a beast that you can't control. But what if I told you that in this video, I'm going to break things down, we're going to simplify it, and it's going to give you all the tools that you need in order to start understanding why price is doing what it's doing. And it comes down to the simple idea of market structure. And within this idea of market structure, there are two fundamental states that the price could be in. The first one is balance, also known as range-bound price action. So that's where the sellers and the buyers agree on the price, and you have price moving within a very defined range. You can see that within the red rectangle and square over here. And then the second state is called imbalance. So that's when price is trending. It could either trend down or it could trend up. And when price is trending, it just means that the market participant in that state is very aggressive, pushing price either up or down, right? And so this aggressiveness, this willingness to buy prices at higher prices or willingness to buy prices at lower prices will drive price lower. And so what we're going to do here, we're going to take a look at what's happened over the last couple of weeks. I'm going to try to walk you through some very detailed price action, and we're going to see exactly what's happened. And I think it's going to clear up some things. What you're looking at here is SPX on the daily chart. You can see that after a period of moving lower, and especially on this day where we saw this big break lower, we put in a failed breakdown. And so a failed breakdown is when sellers fail to push prices lower. You have buyers stepping in and then accelerating price to the upside. You can see that after a big move lower, which is a trend lower, or price is an imbalance, we saw this reverse, right? Now we're in a imbalance to the upside. You can see it's an imbalance because every day you have a higher low, right? You have a higher low here, 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 and here. And then we enter this area over here, which you have range bound price action, right? Every day is bouncing up and down. And so within this red area here, a balance area, you can see that we have this very defined range. The top of the range is around that 6,900. The bottom of the range is around that 6,800. And you can see that once we tested 6,800, we bounced, buyers stepping in, pushed prices higher. And then resistance, 6,900, where sellers stepped in and became the dominant force that pushed price lower. So you can see 6,800 bounce, 6,900 sell. 6,800, and we caught a little bit of a bounce here, but in this instance, we failed to push higher. But before that, look what happened over here. And here's another important concept. We're going to review the balance rules. So the balance rules are simple. When you're in balance, you trade the balance. So you go long at the bottom and you sell the top. Whenever you get a fail to break out of balance, you revert back into the balance and you're still in it. So you trade the same rules. Now, if the balance breaks either way, to the upside or the downside, you go with the break. So if you break up here, you go with the break up. You go long. And if you break down, you go short. So over the last couple of weeks, we've had two instances where this has happened. And there's another concept here, which is a look above and fail. Look above and fail was what we got over here. So on this day, we closed above the balance area, right above that 6,900. And so technically speaking, this next day could be an upside day. But what happened here is that we gapped down. And once we tested that 6,900, that became the high of the day. And sellers stepped in, right? They took the opportunity to sell back the top of the balance area back to the low. So this is called a look above and fail. A failed breakdown is when sellers fail to push price lower. And look above and fail is when it looks like they're going to break out, but sellers step in and push price lower. Now, this move traversed all the way back down to 6,800. These 2 days, the lower days, were right at the balance area low, around 6,800. And then the next day, we opened right below that balance area, and we attempted to push higher, but then sellers stepped in and pushed it lower. This other day, the second day here, same, but you can see that in this instance, sellers really took control and aggressively pushed price lower. Now, it's worth to mention what the two purple lines are. And you can see up here, it says expanding megaphone. So we had a balance area within a technical pattern expanding megaphone. And an expanding megaphone pattern is basically when you have higher lows, lower lows, and it creates this megaphone pattern. And so it's important, right? Because after breaking the balance area, and you had a really nice day here trading short, we put in a bit of a failed breakdown of this megaphone pattern, and we saw this reversal back higher. And then on Friday was interesting, right? Friday was interesting because we opened up right below 6,800, but that became the low of the day. The opening price became the low of the day, and it was all upside. And very quickly, within the first few minutes of the trading session on Friday, we broke back into the balance area and we pushed into, uh, the middle part of it. And so I remember on Friday posting on X that 6,800 will be a very important pivot. And the reason I wrote that was exactly what I'm kind of explaining here, right? Because I knew that if we break the balance area, push lower, but if buyers step back in and push it back into this balance area, which is 6,800, we had a pretty good chance of getting this aggressive buying price action back into that 6,900. And we closed at 6,834.49 on Friday, which is a really good end to the week. I think it sets us up for 6,900. Now, what could happen now? Right? What could happen is that we break Friday high on Monday or on Tuesday or on Wednesday at some point next week, and we could break back up to 6,900. If 6,900 breaks, you're going to have to go with the rule, which is if a balance area breaks, you go with the direction. And so it would be up. For me, if it breaks 6,900 next time, it's going to be a higher likelihood that the breakout will succeed and we'll have a sustained breakout higher. And you might ask yourself why. Well, it's simply because we had an active failed breakdown. The sellers failed to push price lower and maintain price lower. Buyers stepping in here, and now they're a lot stronger here because of this. You have a lot of sellers, on the wrong side of things, and they're getting short squeezed to the upside. So it remains to be seen what happens, but understanding price action and understanding the market structure and the two different states they're in, you could clearly see how that's an advantage to you. Because when we're moving lower here, you understand we're in a trend. And we move up here, you know we're in a trend, so you can trade the trend to the upside. And another thing here, which is very, very important, is that always after imbalance, there's balance. Because remember, a balance is basically when there's this fight between the buyers and the sellers. You have this, push and pull where neither sides are winning the race. You have this, very defined range that we trade in. So after a big break higher here, after a big trend higher, you always have to anticipate a possible bounce area. And that's what I did a few weeks ago. I said that after this huge move higher from 6,500 to 6,850, it's more likely than not we might sit and become more range bound that we were over here. And that's exactly what we had. And it just made sense that we would have a top of the balance area around 6,900 or all-time high area. And then 6,800, was a real nice kind of bottom of that balance area. So I very early on remember drawing it something like this, right? And as price started filling in here, we started expanding this to the right side and we started looking at these areas, right? We looked at the top of the balance area and we attempted to play the upside and that failed. And we looked at the bottom of the area and we traded the downside once we broke 6,800. And then on Friday, we broke back into this bounce area and we traded long. And so I think this is a pretty good example that if you understand market structure, not only can you on the fly and very nimbly switch, long versus short, but you'll start being able to anticipate what could happen and therefore set yourself up for success. And just one more thing here, what we're going to do, we're going to go to the weekly. And it's important to see it for what it is, which is, very clearly a failed breakdown. I've been talking about how this week was a very nice attempt by the bears to push price below the previous 2 week lows. And the previous 2 week lows were right around that 6,800. And so it made sense to me that the bottom of the bounce area was that 6,800 exactly. And so For me, the weekly just shows me that the buyers are very strong still. After a big push higher, we're still sitting in a balance on the weekly and on the daily. And after this big, what I call short fuel or short squeeze to the upside, I think we have a higher likelihood of pushing into new all-time highs in the next few weeks. So I hope this video gave you a pretty good idea of how I approach the markets. This is how I simply look at things. Either buyers or sellers are winning, or neither. And if you could understand this on a deep level, I think you could start seeing it a lot more clearly. And you take something that is very complex, such as the stock market is, and you can simplify it to in a way that is a lot more easy to decipher and trade. So I hope that this short video has given you something to ponder on and made things clearer. And if it did, feel free to hit the like, repost this. It helps me tremendously and helps others to see it. And with that, thanks so much for watching. Take care. Bye bye.